Hello, very good morning to all and welcome to today's Daily Dose of Market Insights. I'm Kelvin here again. Very good morning. Today will be Wednesday, the 4th of September 2024. So before we jump straight into our Daily Dose of Market Insights, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell or recommendation or financial advice for any investment product, as well as any forecast, prediction, projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so before we jump straight into the short-term technical outlook, let's have a recap what has taken shape yesterday in terms of the related significant news flow, economic data releases, and their impact on the performance, or I would say the intraday performance on the broad-based cross-asset classes ranging from the major stock indices, the FX market, and the two key commodities prices. All right, so let's start with the economic data release from yesterday first. So we do highlight in our Daily Dose of Market Insights. Right now, market participants will be very focused on growth-related economic data release, especially out from the US, given the fact that the Fed has already give a very clear-cut guidance that they will actually cut, potentially, I would say, I would like to use word potentially cut interest rate in this month. That means, i.e., after the 18th of September FOMC meeting. But market is now concerned is that are they too late in this particular interest rate cut cycle? That means they're actually cutting right now, where potentially the US has already slipped into a recession. And if this scenario materializes, it does not gel well for risk assets in terms of their performance, especially if we talk about those higher beta growth related equities like mega cap stocks is one of the group, and semiconductor stocks. So what we could see over here is yesterday we do have the release of this US ISM services manufacturing PMI, which is considered as a leading growth economic indicator or data. So yes, this is the one over here, ISM manufacturing. Okay, so you look at the ISM manufacturing PMI data, it continues to contract in a reading below 50. So it came in at 47.2, slightly below 47.5 that what is market is expecting. But if you look at the trend over here, okay, so if you look at the current trend of the ISM manufacturing PMI, overall it's still in a lackluster mode, right? So this is the absolute value. So if you look at in percentage change point, all right, it's still not showing any signs of a clear cut of a recovery at this juncture. So market got a bit of we call it a fearful yesterday, and we start to see a intraday sell-off across the board in the major US stock indices. So before I share with you on this the performance chart of the major US stock indices, there's one little component within the ISM manufacturing PMI is the ISM manufacturing new orders. So the number of so-called new business purchase orders that's being issued to these manufacturing firms in the United States has been compiled by ISM. This is the body that compiled this manufacturing PMI data. The new orders actually fell down at a faster pace, all right, at 44.6 versus 47.4. So overall, if you look at it over here, is that this particular key sub-component of the ISM manufacturing new order, I mean, is part of the component of the manufacturing headline PMI data, continues to actually decelerate since June over here. All right, so that's why that actually explain that negative feedback loop that is being transpired or triggered into the broad-based major US stock indices yesterday. So what we could see over here is that across the board, the market got hit. The worst hit was actually coming in from the Nasdaq 100, which considered as a higher beta US stock index. Why? Because it comprises a lot of mega cap stocks and growth related play, which is a part of this technology group cohort, down negative 3.15%. And the other one got hit pretty badly as well was the Russell 2000, comprises of small cap company that tend to have a weaker balance sheets compared to their so-called those companies that are listed on the Dow Jones and the S&P 500 or inside the Dow Jones and the S&P 500, pardon me, down negative 3.1%. The Dow Jones fared relatively better because it do have certain key component stocks that are concentrated on the more of the defensive side of the play, such as healthcare, which is actually down at a lower magnitude of negative 1.5%. And the SPX definitely will track the Nasdaq 100, given that the top 5 component stocks are heavily weighted on the mega cap technology stocks in the SPX 500, down negative 2.12%. So if you look at the heat map of the S&P 500 yesterday, across the board, we could see a slew of deep red in the mega cap technology stocks, especially the semiconductor stocks or the semiconductor sector, I would say, or group within the technology sector that is being dragged down by Nvidia, which is almost down by negative 10%, to be precise, negative 9.53%. And we see some pockets of green in the consumer staples or the defensive sector, and this part of the defensive play, and the healthcare sector, which considers a defensive play as well. So if you look at it from, if you break down by the 11 sectors in terms of the sectorial format, we could see over here is that very clearly the worst hit was the technology yesterday. So the top performer was the defensive. Oops, where are we now? Sorry about that. Was the defensive, managed to gain 0.46% unchanged on the real estate, and the utilities negative 0.45% over here. So what we could see right now, a lot of us will be cautious over here. How do we navigate this particular scenario as it starts to play out in the US stock market? Later, I will actually share with you all during the fundamentals and the intermarket dynamics when I cover on that particular session. So let us now continue on the key event and news flow first. So one particular key event that impacted the oil price yesterday was this particular news over here is that the Libya is considered one of the key oil producers in Middle East. So they decided to actually restore crude oil supply back into the region and as well as globally. So that actually created a supply, what I call it, I put it away that excessive supply or additional supply, I rather with additional supply narrative back into the oil market that saw the WTI crude oil price plunge negative 5% yesterday. And this plunge of negative 5% yesterday also triggered a lot of algo systematic short-term speculators to actually take on a bearish position. Why? Because yesterday oil price broke down a key major range support level at around the 73/72 US dollar per barrel. So later I'll highlight that in the daily technical chart when we go to the intraday technical segment of West Texas crude oil. And also there's actually a kind of a rumor saying that next month the OPEC Plus may start restoring much more output from October onwards. All right. So given that these two news that are related to more additional supply of oil coming into the oil market, it causes a negative feedback loop, and this negative feedback loop trigger systematic short-term speculators to add on more bearish bets into the West Texas crude oil and Brent crude oil futures contract, because their model is based on potentially key levels being taken up on the downside or either on the upside. This is how this particular systematic funds behave. And like I mentioned earlier, because of this negative feedback loop, breach below a key major range support for WTI crude will be at the $73 per barrel / $72 per barrel. That reinforced that or magnified yesterday's bearish momentum in West Texas crude oil and as well as Brent crude. All right. And one more particular news flow over here is more related to China. So today, China sizing PMI data or the services PMI data releases over here. So it came in way below market expecting. So this services PMI is actually more related, okay, because you know that China, there's two body that actually release PMI data, both for the services sector and the manufacturing sector. The one that has stated MBS, they call that the National Bureau Board of Statistics. So that is the official one. Caixin is more, Caixin is one of the key media, we call it media outlet in China. They also do actually compile services and manufacturing PMI for China, with the fact that the slight difference between Caixin and MBS is that MBS consists of large MNCs, whilst Caixin consists of large MNCs and inclusive of the small medium enterprise as well. So it gives us a better, I would say that bigger picture of the entire services and manufacturing sectors in China, as they include in the SMEs for the PMI data that's compiled by Caixin. So what's alarming over here is that we start to see services. We know that the services PMI represents services activity in China. We also represents the state of the internal demand. That means how much consumers are spending indirectly. So it actually continues. As long as anything that's above 50 is growing, but the rate of growing is actually decelerating. Why? Because from 52.1 that was printed in the month of July, it actually fell much lower to 51.6, way below what market is expecting at 52.2. So if you look at the trend over here by opening up the chart, all right. So since it's May high of this level here, about 54, it actually continues to actually sluggish. That means the growth starts to actually decelerate. So you put it in percentage change, very obvious that it starts to actually shaping that downside momentum in terms of the growth trajectory. So net overall, it actually indicates to us that at this point in time, because now we are heading to the fourth quarter of this year, and the China top policy maker has really set aside 5% GDP growth before 24 ends. That's the annual growth for China that what they hope to actually achieve. But given this state of very lackluster or weak internal demand as being depicted by the latest China's Caixin civil services PMI data that fall below July print and below consensus, is indicate that whatever policy that China policymakers is playing out right now is insufficient to actually meet their 5% growth target. So very likely they may start to introduce more, we call it a forceful fiscal and monetary policy, something to keep a lookout for. But in the short term, it also starts to see a bit of negative feedback look into the related instrument like the Aussie dollar, which I highlighted yesterday in our fundamental and intermarket dynamics via the iron ore prices. So for those who missed out, can actually take a look at our YouTube video yesterday under the intermarket and fundamentals sub-component of that video, right? That particular chapter which I covered why Aussie dollar could remain weak in the near term because of this weakness on the iron ore prices that is related to lackluster economic growth condition in China. All right. So this is the key, we call it data point, and as well as its impact on the markets right now that I want to share with you guys. So right now, let us now immediately jump straight into the fundamental and the intermarket dynamics. All right. So the fundamental and the dynamics today, I want to share with you more pertaining to the US stock market over here. All right. So at this juncture, okay, let me expand. All right. So what we could see over here is that this is the year-to-date performance as of yesterday, 3rd of September. So what we could see over here is that this is a percentage price, all right, but we also can do a bit of technical analysis as well on it. So what we could see is that NVIDIA price, yeah, even though it's still year-to-date, right, it's actually trading at triple digit at positive 124.24, but its growth has starts to actually plummet downwards, plummeting downwards over here. So what I could see over here is that even though from 5th of August all the way up, that rally didn't surpass this major range resistance that I drew from its year-to-date highest high watermark of 182% over here, and it plunged downwards. And this plunge downwards over here has a negative feedback loop into the S&P 500 and also the Nasdaq 100, and has at some point into the entire US stock market if this thing continues to go down. Why? Because this guy has too many fund flows into it. All right, so if a particular stock that has too many fund flows into it over here, and is the market leader that is driving the current year-to-date return of the US stock market, very obvious over here, this guy is leading way above the rest of the other US stock market in terms of the sector wise and in terms of the benchmark major US stock indices as well. So what I could see over here is that even within the cohort of the mega cap 7 are including Netflix, they only gained 25% year to date. All right, and Nvidia is part of the semiconductor ETF. They also gain the semiconductor ETF only gained 15%. All right, over here it's almost on par with the Nasdaq 100 and the SPX 500. Okay, both gaining year-to-date return of 16% and 15%. And what we could see over here is that the equal weight ETF, the S&P equal weight ETF, that means what the ETF manager did is that among all the 500 stocks in the S&P 500, all of them will be assigned an equal weightage. All right, it's gained by positive 11%. Okay, then the Dow Jones 8.5%, and the weakest is still the Russell at 6.8%. But what's interesting over here is that that previous plunge on Nvidia that has taken shape, the breakdown of this support over here, that has taken shape before the dramatic sell-off across the board globally in 5th of August, kickstart the push-up in the what I call it, the push-up higher high in VIX, okay, before that dramatic spike up. So now this VIX over here is also start to shape a higher high as well. All right, so now going forward, right, at this juncture over here, okay, so now the VIX is 20.71. Okay, so going forward at this juncture, at this point in time, the VIX has shaped a higher high. That means potentially this VIX could actually see further potential movement on the upside rather than the downside. And we know that a push up in VIX doesn't gel well for the major US stock indices, especially given the fact that Nvidia is the one that is triggering this negative feedback loop, and Nvidia has a significant weightage in the S&P 500, the semiconductor ETF for sure, and as well as the Nasdaq 100. Okay, so going forward, if I were to be very cautious in terms of having a rather bullish bias on the Nasdaq 100, even on a shorter term perspective. And we know that the semiconductor ETF is the leading sector within the technology, is a leading kind of sectorial ETF within the US stock market. If you will look at the technical configuration, or based on the intermarket technical configuration of the semiconductor over here. Okay, let me share with you where is the semiconductor. Yeah, over here. Okay, so this is basically the semiconductor ETF. Okay, let me put it in writing. Okay, so this is the daily chart. Oops. Okay, I hope that I'm able. Okay, I think it's hang right now. I'll give it a minute. Okay, hopefully it works. Okay, good. This is the daily chart. Okay, then this is the semiconductor ETF. So the ticker is called SOX, SOXX. OXX. Okay, so everything is pretty much clear right now. Okay, so this is the daily chart of the US semiconductor ETF, ticker SOX. So what I could see over here is that the 5th of August rally can't surpass a medium-term resistance at 24259, and yesterday price session breached below the key 200-day moving average. And I want you to take a look at its relative performance, or the relative strength, or the ratio between its price action versus the S&P 500, taking into the ETF, they call the SPY, has started to shape bearish configuration as well. All right, breaking below the 20-day moving average, this ratio, and the semiconductor within the info technology sector. All right, that means the semiconductor industry versus the information technology ETF. Because why? Because semiconductor is part of the information technology sector, or in this case, we put it the ETF. So by looking at these two negative configuration in terms of relative strength, that means the semiconductor now is getting very weak against the broader market, the SPX 500, and also against its sector, means against the information technology sector itself, all right, by breaking below the 20-day moving average on this ratio, the ratio chart of these two key intermarket dynamics. So what you could see from an intermarket dynamics, the semiconductor group of stocks, because this is an ETF, it consists of a group of stocks where the highest weightage is Nvidia, is actually now underperforming the broader market, the SPX 500, and also underperforming the information technology itself. It start to shape a very key bearish technical element where it can't break above the 252,659 key medium-term resistance from the 5th of August low, and yesterday's price action closed below the 200-day moving average. So this gives us further evidence that potentially the SPX 500 and the Nasdaq 100 could remain weak from a multi-day to multi-week perspective, all right, going forward. So this is something pretty much key events or key elements that has unfolded yesterday, which form parts of the fundamental and intermarket dynamics that I want to share with you guys for today. All right. So with that, now let us jump straight into the short-term intraday technical outlook on the broad-based cross-asset classes, starting with the FX market. But before that, let me expand my screen so that you guys could see much clearer on the key levels. All right. So on the key levels over here, before we jump straight into the individual FX market first, or the individual FX pair, I want to share with you all what has taken shape on the euro, on the dollar index. So we know that the dollar index is a basket of currency, consists of basket of currency. That means this dollar index could give us a gauge of where the trend of the dollar will be in terms of settlement. So if this thing is going up, that means dollar is strengthening. If this dollar index is going down, that means the dollar is weakening. And do not forget the dollar index, DXY in short, the major weightage, the three major currency inside the dollar index, firstly will be the euro, then the sterling, and followed by the Japanese yen. All right, especially the euro has a very clear outsize weight inside this US dollar index. So we could see that on Monday and Tuesday we do have a bullish bias on the dollar strength on the European currency, especially the euro and the sterling, and this push up on the dollar index has managed to test the 20-day moving average, I think, as a resistance level. And what we could see over here right now, yesterday price action shaped a kind of a like a spinning top over here, a very small little body, and it's too small little body testing the 20-day moving average. So I could see at this juncture, this push up since Wednesday potentially may have already reached an exhaustion point. That means at least in a short-term perspective, there could be some form of intraday pullback in the dollar index. That means i.e. intraday weakness on the dollar, especially against the European currency, given that the euro and the sterling form a significant weightage in the dollar index. All right, so with that now, given this rather key weak technical or key bearish technical element has emerged in the US dollar index. Bearing that in mind, I mentioned earlier on, it has a higher significant weightage that is the euro and the sterling has a higher significant weightage in the US dollar index, bearing that in mind. So with that, on the euro dollar, all right, we will flip to a bullish bias for today. Okay, given that the dollar index has already made a resistance. Okay, so the euro dollar is the inverse of the dollar index, bearing in mind over here, because now you're looking at 1 euro equals to how many USD. So with that, it's now actually yesterday it actually came down with our expectation, now playing around the 20-day moving average. And what's interesting over here is that yesterday's during the US session, all right, or at the end of the US session, it printed a lower low, okay, in terms of price action. But however, the daily, not daily, the hourly RSI printed a higher low. Okay, so this telling us that the bearish momentum is losing strength on the intraday basis, given the appearance of this bullish divergence at the oversold level. on the hourly RSI. So with that, because the clear support level is this zone over here at 110 level, and also psychologically as well. So I do not put it so tight at yesterday's minor swing lower. This is yesterday's low over here, okay, which is at 110.26. So I'll use slightly lower 110 figure level as my short-term pivotal support for today. Flip to a intraday bullish bias on the euro dollar. Near-term resistance level to watch on the intraday basis, 110.05 followed by 111.40. Only a breakdown with an hourly close below 110 short-term pivotal support for today will invalidate today's bullish bias on the euro dollar to kickstart the continuation of this extension of this minor corrective decline to expose the next near-term support level at 1.095, which also corresponds to the rising 50-day moving average. A breakdown below it exposes 1.087, which also confluence with the 200-day moving average. Okay, so that's for the euro dollar. With that, let us now focus our attention to the sterling dollar. So the sterling dollar is also kind of fast approaching the 20-day moving average that is acting as our support level. So almost hit our our support level at 130.75 yesterday. So slightly above our second support at 130.40. So we will be using a range taking into account of the rising 20-day moving average. So this will be the first support level to watch, 130.75. So using a 130.40/130.10 as my short-term pivotal support on the sterling dollar, we will flip to a short-term intraday bullish bias for today. First resistance level to watch on the intraday basis will be 131.90. Above it, potentially sees a retest of last Wednesday minor swing high at 132.65. Only an hourly close below 130.10 will invalidate today's intraday bullish bias to see the extension of this minor corrective decline move to expose the next near-term support level at 129.40 followed by 128.70 next. So that's for the sterling dollar. Next up will be the Aussie dollar. Still recall that the Aussie dollar yesterday, we do maintain that short-term intraday bearish bias. So yes, the RSI already hit the oversold region over here, but it didn't shape a bullish divergence yet. All right, because price action continues to shape lower low. The RSI also shaped lower low as well. So there's no bullish divergence, so indicating that lower chance of a minor bullish reversal at this juncture for the Aussie dollar. Yes, it's oversold. It also hit our first support level at the 67 figure level. So at this juncture, potentially there could be a bit of bounce. So as long as this bounce didn't surpass 67.60, 67.75, so that is my Titan key short-term pivotal resistance for today. So as long as this bounce didn't surpass this zone, we will still maintain our intraday bearish bias, with the next near-term support level to watch will be at 66.40 basis, which is very close to 200-day moving average as well. Only a push up above 67.75 will invalidate today's intraday bearish bias to see a recovery scenario taking shape to retest last Thursday or last Friday minor swing high at 68.20 next, and even 68.50. All right, so that's for the Aussie dollar. Now moving on will be the Japanese yen, the dollar yen. So dollar yen, if you recall yesterday, we do have a bearish bias, and the bearish bias hit right exactly at our support level at 14555/14515 level over here, and we do see some form of bullish divergence has really been taking shape on the hourly RSI. So price action shape a lower low over here, but the hourly RSI has now shaped a slightly higher low. Okay, over here. Okay, so what we could see, this particular where was it? Yeah, so this particular push down yesterday on the intraday basis for the dollar yen, for this the hourly chart, is losing its bearish momentum. So with this positive element that is taking shape, or is taking shape in the dollar yen, we will flip to a bullish bias, at least on an intraday basis on the dollar yen, using slightly below 14515, which is 14425. So this 14425 is also the lower boundary of this minor ascending trend line the minor ascending trend line support that I drew from the low of 5th of August, that was being supported on 26th of August, 28th of August and coming to act as a support right now as well at 144.25. So as long as 144.25 short-term pivotal support holds, we will flip to a intraday bullish bias on the dollar yen. First resistance to watch equal to surpass will be at 146.25, this level over here. Let me put it in writing. Okay, 146.25. Okay, 146.25 above, only above 146.25 potentially exposes 147.50 next. All right, but however, if the price action didn't bounce and continues to break down and break below 144.25, which is our short-term pivotal support for today, then this bullish bias will be invalidated to kickstart a potential, we call it impulsive downward sequence towards 143.45, a breakdown below it, revisit the 5th of August minus swing low in first step at 141.60/141.40 next. All right, so that's for the dollar yen. Okay, so now that sums up the intraday technical outlook on the FX market. So shifting our attention will be the major stock indices, starting with the Hong Kong 33. So the Hong Kong 33, we do have a bearish bias since Monday, and price action continues to slide as expected. So for today, even though you look at the current price action, yes, it's oversold. You mentioned bounce off the oversold level, but we do not see a bullish divergence on the RSI, because RSI going to shape lower low in line with the price action of the Hong Kong 33 as well, or i.e. the Hang Seng Index. So with that, potentially there could be a bit of bounce over here going forward. So as long as this minor bounce didn't surpass today's tightened key short-term pivotal resistance at 17,660, which is very close to also to yesterday's US session. So as long as this bounce didn't surpass 17,660, we will still maintain that short-term intraday bearish bias, with the next support level to watch out for will be at 17,270, 17,185, which confluence with the 200-day moving average, and as well as the golden ratio of 61.8%, taken from the low of 5th of August all the way up to last Friday high. Okay, 61.8% over here. Okay, however, if price action on an hourly basis managed to stage an hourly close above 17,660, means a breakout above the short-term pivotal, tightened short-term pivotal resistance for today, that will invalidate today's intraday bearish bias to see a potential recovery towards 17,925, followed by 18,060/18,160 next. Okay, so that's for the Hong Kong 33. Now moving our attention will be the Japan 225. So for the Japan 225, yesterday we do have a bearish bias. So this bearish bias almost come to hit our support level already, the second support level that we highlighted, 36,885/36,630 level. Okay, and right now also playing around at the 20-day moving average, and the hourly RSI has already hit a oversold region. Okay, so with that, I'll be using this support level here as a short-term pivotal support, looking for at least an intraday bounce first, at least a kind of an intraday short-term bounce basis for the Japan 225. So I will flip to a intraday bullish bias for this potential minor bounce to play out, as long as 36,885/36,630 short-term pivotal support holds on the Japan 225, or i.e. the Nikkei 225. Two near-term resistance level to watch on the intraday basis will be at 37,880 over here, followed by 38,470. Okay, let me highlight 38,470. Okay, over here. All right, but however, if price action starts to break down, if an hourly close below 36,630, then this intraday bullish bias scenario for that potential minor bounce will be invalidated to kickstart the continuation of this minor corrective, a minor decline sequence to expose the next support level at 35,860. A breakdown below it sees 34,500 next. Okay, so that's for the Japan 225. Moving on will be one of the major European stock index, will be the German 30 or the German DAX. Very similar to the Japan 225 as well, where we have a bearish bias since Monday, or since Tuesday, since Monday, yeah. So price actually already hit our support level that we highlighted, 18,550 that we have yesterday. So with that, and the hourly RSI has also go down to a rather extreme oversold level. So this is almost very similar to the oversold level that was almost reached on the 5th of August low over here. Okay, very closer to this level. Okay, almost hit this level. I would say it's more or less the same level over here. So given it hit an extreme oversold level, there could be also a chance of a minor bounce unfolding as well on the this German 30 index for today on an intraday basis. So I don't put it so tight at 18,550 because slightly below it, it has more technical elements confluencing at this level at 18,350, which is the 50-day and the 20-day moving average, both acting as a similar support level at this 18,350. So using 18,350 as my short-term pivotal support on the German 30, flip to a short-term intraday bullish bias for a minor bounce scenario to unfold. First resistance level to watch will be 18,820 over here. Okay, 18,820. Okay, at this juncture. Okay, only a break above 18,820 potentially exposes 19,025 next. All right. Okay, however, if price action starts to break down with an hourly close below 18,350, then this minor bounce scenario will be invalidated, which means i.e. the invalidation of today's intraday bullish bias to see the continuation of this minor corrective decline sequence to expose 18,075 and potentially even 17,820, which correspond to the 200-day moving average, I think as a similar support level as well. All right, so that sum up the German 30. So let us now focus our attention to the US major, the major US stock indices, starting with the US Wall Street 30 and the i.e. the Dow Jones Industrial Average. So the Dow Jones Industrial Average broke below our short-term pivotal support yesterday at around this 41,010 level. Okay, this mark over here. So what you could see over here is that right now it's now drifting very close to the 46,110 graphical support level, which is the minor swing low of 19th of August and 20th of August, and confluencing with the 20-day moving average. And given this weakness on the S&P 500 and the Nasdaq 100, with the weakness that's being seen on the key semiconductor sector, dragged down by Nvidia, so I'll be much more cautious on the US Wall Street 30. Yes, even though it's on another key short-term support level right now, coming very close to it. Over here, the RSI is in oversold region, but there's no bullish divergence. So with that lack of bullish divergence, I would rather have a neutrality stance on the US Wall Street 30 for today. So neutral between 41,200, which was this yesterday's minor swing low, now turns into a pullback support. Not yesterday, yeah, last Friday and last Thursday minor swing low, now turns into a pullback support, pullback resistance. All right, at 41,200 and 40,610. So only a clearance back above 41,200 will reinstate the bullish bias on the US Wall Street 30 for the next resistance to come in the near term at 41,535, followed by 41,800 level. So neutral for today for the US Wall Street 30 between 41,200 and 40,610. And before we touch on the Nasdaq 100, we know that the Nasdaq 100 has one of the significant weightage. Nvidia has a significant weightage in the Nasdaq 100. So if you look at the chart of Nvidia yesterday, was pretty much bearish. So yesterday's price action actually immediately gapped down because of Monday. It has a public holiday in US. The price action gapped down below the 50 and the 20-day moving average. And it's also now testing this major ascending trendline support that I drew from the low of 13th October 2022. So that's about 2 years ago. Trendline support level is now testing at this level, and the daily RSI continues to be having that bearish dynamic, shaping a series of lower high. And yesterday it actually breached now very clearly below the 50 level mark and hasn't even hit the oversold region yet over here. So potentially, right, we could see a bit of much more further weakness movement on Nvidia to retest 95.10 going forward. That's very close to the 200-day moving average as well. So in short-term basis over here, that could actually potentially translate to a short-term intraday technical outlook on or technical feedback loop into the Nasdaq 100, given the fact that NVIDIA has a significant weightage in Nasdaq 100. So with that, on the Nasdaq 100 yesterday, okay, where's the Nasdaq 100? Yeah, on the Nasdaq 100 yesterday, also broken below our short-term pivotal support level as well, which is the 220-day moving average. So this level here will turns into a short-term pivotal resistance for today, a key short-term pivotal resistance for today, 19,117. RSI oversold, but no bullish divergence, so potentially there could be a bit of bounce taking shape. So as long as this bounce didn't surpass above 19,117, we will flip to a short-term intraday bearish bias on the Nasdaq 100. Next support level to watch will be at 18,680, followed by 18,320, which is pretty much key. Why? Because that confluence with the 200-day moving average as well. Only hourly close back above 19,117 will negate the bearish bias on the Nasdaq 100 to see at least a bounce back to revisit 19,000, to see the extension of a bounce to revisit the 19,630 level that it failed to surpass on last Friday itself. All right, on last Friday. Okay, and yesterday as well, given that yesterday managed to actually try to hit this level but can't break above that, tumbled all the way during the US session. Okay, so that sum up the intraday technical outlook on the major stock indices. So now let us shift our attention now towards the commodities market, starting with gold XAU/USD. So for gold XAU/USD, no change. Price action continues to actually hold right exactly at the 20-day moving average. It sell off, managed to test and shape a bounce right exactly at 2,473. So still no change. 2,473 for sure will be our key short-term pivotal support level to maintain this short-term intraday bullish bias for gold XAU/USD. But the first resistance to watch will only be at 2,532, which is a kind of a minor range resistance that has already been taken form since its all-time high level, that all-time high that was printed on 20th of August this year. So only a clearance above 2,532 will kind of add more impulses for a impulsive up move to expose the next near-term resistance zone at 2,588/2,595. Only let's say if price action come down and break below 2,473 for today, then the intraday bullish bias will be invalidated to see extension of this minor corrective, to see a minor corrective decline scenario unfolding, to kind of revisit the rising 50-day moving average, which is acting as confluencing with the next graphical support zone at 2,435/2,415. Okay, so that's for gold XAU/USD. So now turning our attention to West Texas crude oil. So like I mentioned, due to the negative news flow earlier on West Texas crude oil, it actually plummeted below the range support, the symmetrical range support that managed to hold West Texas crude oil since the low of 20th of March 2023. And yesterday price action, negative price action has erased the year-to-date gain so far, and it's now trading very close, almost very close to last December level over here, right? So it really broken below this key range support level. All right. Okay, so with that in mind, okay, whoops, where is it? Okay, so this one here, okay, will be in red. Okay, so with this bearish breakdown, we will flip to a intraday bearish bias on West Texas crude oil. So forget for any bounce. So in any bounce back into the 73.15 level, which is this dotted gray line here, former major range resistance now turned into a pullback. Former major range support now turns into a pullback resistance, pardon me. So with that, the hourly RSI now has already hit the extreme oversold level. So potentially there could be this first support level is 70.40, which we highlighted yesterday as well, after the breakdown of 72.24, almost hit, and with the hourly RSI at the extreme oversold level, there could be some form of a bounce taking shape. So as long as this bounce didn't surpass 73.15 short-term pivotal resistance that we have for today, we will have a short-term intraday bearish bias, looking for the next support level to come in after 70.40 at 69.20, followed by 68.20. So 68.20 is the lower boundary of this ongoing minor descending channel that I drew from the high of 18th of July, given that it has very clearly broken down the major range support yesterday. Okay, and if price action starts to break out above 72.25, then 73.15, then that could be a failure bearish breakdown yesterday to see another form of choppy movement for West Texas Oil to reintegrate above the next resistance to come in at 75.07, followed by 76.45, which also correspond to the 20-day moving average, acting as a resistance level as well. Right. So that sum up the intraday technical outlook on the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar to see what are the key data to look out for today. All right, so for today, we do have a slew of this shouldn't be quite important because these are the final release for the Eurozone services PMI and as well as the UK services PMI data, because more or less it should be in line with the preliminary figure that was released 2 weeks ago. And the most important one to highlight over here will be for those who are actually looking at the Canada dollar, Bank of Canada interest rate decision that's out at 9:45 p.m. Singapore time, and market do expect another 25 basis point cut by Bank of Canada to bring the policy rate down to 4.25% from 4.5%. And then thereafter 10:30 p.m. Singapore time, the Bank of Canada governor will actually host its press conference. Okay, then other than that, not much key economic data. Okay, this is related to jobs opening, but JOLD, so it's a job opening, job market related data in US at 10 p.m. Singapore time. Not so much of importance as compared to this Friday non-farm payroll data. All right, so with that, a rather quiet US session, I would say. So that could potentially, that sum up today's daily dose of market insights. So with that, I'm Kelvin here, signing off, and I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.